Hi everybody, welcome to this week's live stream. A handy reminder in the chat there from Richard, our clocks in the UK and Europe go back an hour on Sunday. The Americans don't put their clocks back for another week after that, so there's only going to be a 4-hour difference between us and the US Open next week. Always catches me out, that one. So it's good to have a reminder. We are going to start off with stocks this week, I think, because there's been a lot of stock focus in the news because of what's obviously Twitter, the Elon Musk takeover going through, Facebook/Meta, big falls after their numbers. So we'll start off with stocks. First of all, as usual, let's get the housekeeping out of the way. So if you haven't attended one of these before, I run it every week on a Friday at 2:30 UK time on a Friday. We have a quick look ahead, what's the main news for next week, and then look at the major markets, indices, commodities, FX, see where the opportunities might be. I'll talk about some of the trades I've done over the last week and what I'm looking at next week. And then we'll get into the questions and answer any stuff and have a look at any stuff you want looking at. First of all, let's just do a risk warning. This presentation is only for educational purposes. This presentation does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets and CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. There you go. Major announcements. There's a lot going on next. I mean, there's a lot going on anyway at the moment, but there's quite a lot next week anyway. So Monday, European GDP. How well or not is the European economy doing? Tuesday, Australian interest rates decision. Obviously, with inflation, still the big theme. Interest rate decisions are closely watched. Wednesday is the big one. Normally about 6 o'clock UK time, isn't it? So it'll be, I'm guessing, 5 o'clock next week with a clock change. You see, it's going to throw me. But in the evening anyway, European time, the US interest rate decision and the press conference afterwards. It will be interesting what impact that has, if any, on the US dollar. And I do wonder, I've talked about it for a bit. I did talk about it again last week. What will be the thing that starts to take some of the steam out of the US dollar? And if you look at, we'll have a look at Euro US dollar, and there's an argument, is it starting to turn? We'll have a look at it in a second. But anyway, next week, US interest rates. Thursday, UK interest rates. I think 0.75%, I think, is the expectation, isn't it? I think for the raise the next week, I think, on UK interest rates. This stuff tends to be priced in to the market, but let's see. Obviously watch the pound, watch gilts. I'll talk a bit about gilts again today because I've traded those twice in the last week. I mentioned them last Friday. I did actually do the trade last Friday and did another trade middle of this week. So I'll talk about those. Obviously pretty active market at the moment, given the bit of a chaotic political situation we've had in the UK for a number of weeks. And if all that wasn't enough, Friday, US non-farm payrolls. So the US unemployment numbers this time next week, or 1:30. Oh, God knows, with the time difference, I don't even know what time it's going to come out. 12:30, isn't it? I guess it'd be 12:30 UK time next week. We'll do the live stream 2:30 as usual next week. So we'll be doing the live stream 2 hours after the payrolls have come out. So that's a big week next week again. So we could see some volatility. Happy birthday to Gangrene, if it's your birthday today, in the chat. Quick word from our sponsors, which is me, of course. I've got a training course that I've run for a couple of years now, covering trading over weeks and months. I've actually just added, I haven't added it yet. This week, I've recorded a whole new course on shorter term trading, days and weeks. For those of you who are already part of the course, you will get the email when I've finished editing it, and you'll be able to access it for no extra fee. It'll be in there. So it will basically double the existing course content. I'm expecting that to be on the website, fingers crossed, if I can figure out the technology in the next couple of weeks, but definitely by the end of November. The course I cover setting proper stop losses, how to run winners, add to positions, risk management, trading psychology. I think when it comes to trading, plenty of people think it's all about the entries, and that's parts of the trading strategy. And I talk, particularly in the shorter term trading course I've recorded over the last couple of weeks, I talk about 4 short-term trading setups I use and the 2 I use most of the time. But that's still only part of the trade. You've got to manage the trade, you've got to think about risk, all of that. So I cover all of that in the course. So at the moment, there's about 8 hours of pre-recorded content. That will be more like 15, 16 once I've finished this shorter-term course. 3 hours of live webinars. So once a month, I do a live webinar with the people who attend the course. So again, if you've been on the course before, the next live webinar is next Thursday night, I think, as it's the first one in November. I'll send you the email out. An ongoing, unlimited support. Any questions, drop me an email. But to find out more about the training course, to enroll on the course, go to www.jonesthemarkets.com, and the link is in the description of this video. And also is the link to the charts I use for this presentation as well. To find out more about that, that's in the description down below. Right, let's get on to it. We'll start with stock markets. So we'll start with the S&P. Actually, before we do that, let's have a quick look at this Meta stock, because I keep reading how much money Mark Zuckerberg has had wiped off his fortune over the last, how long is it now? When was the peak in Facebook? It was back up here, wasn't it? So that was September last year. Facebook shares were 380, and today they've just opened at about just under $100. I mean, it's pretty brutal. And there's the gap this week. There you go. So on the earnings this week, on Wednesday night, I'm guessing, the official close was about $129, $130 for the stock, and then opened yesterday at 98. So it's that 30% drop in the stock on those earnings. I mean, it's been brutal, this Facebook sell-off. I remember in the old days, I think I did do a bit of a speculative buy in here, wondering if they were bottoming with the stop loss in place. I mean, clearly that's all long gone. For me, the trend on Meta, absolutely still down. So nothing too exciting. I mean, if you were going to go, I always struggle to go short in a market that's already fallen a lot like this. So personally, for me, it's an interesting one to watch, but nothing much to do with it at the moment. But let's see what happens. But I mean, that has been a brutal 14 months or so for the Facebook stock. Anyway, let's have a look at the S&P. That's where we're going to start things off. I think it's interesting what's gone on in the short term with the S&P. First of all, if we did a big picture view on the S&P, you could argue the trend from January is still down. Okay, so you could take the view, even if we see a strong rally from here, this S&P trend is still down, and it needs to break, at least 4,100, 4,200 to start to look as if the trend is over. And you could absolutely argue this is a valid downtrend line. We've got lower highs, we've got lower lows, everything's hunky-dory. Okay, so for me, you could take the view this year's trend is still very much in place. A more aggressive viewpoint, I think, would be to perhaps be a buyer of dips in the short term. Okay, and what I'm basing that on, we had this old low in June of this year. Now the market did take that out in October, late September, early October, but reversed off it pretty sharpish. But then it did slip back below it. But then we've seen quite a sharp reversal. So we are seeing some buying aggression, or we have seen some buying aggression down around 3,600, and it's having a go, or it's had a go this week, pushing back up to where it was about a month ago. So if we flip this over to the hourlies, perhaps that makes it a bit clearer. So for me, we're seeing a strong start to trading today. For me, going into next week, assuming the market doesn't fall off a cliff today, I do wonder if there's if it's still a short-term buying opportunity in the S&P. Okay, so short-term, I think perhaps could still be a bit of momentum left going into next week. Be interesting to see what the market's reaction is to the US interest rate decision on Wednesday. Let's see what happens. So, big trend, I'd say, unarguably still down for the year. on the S&P, but I wonder if we get a bit of a further recovery next week in this market. I'm guessing it's going to be pretty similar to the Nasdaq. It is pretty similar. I mean, if I was going to go back and pick up on, the big Nasdaq trend, if we did the same period as the S&P, it's going to look something like that. It's not quite as clear cut as the S&P, but there's our big Nasdaq trend. Arguably, because what we've seen with Meta this week will have dragged on the Nasdaq with some of these tech stocks taking a hit. If we flip it over to the hourlies, we do still have it's a bit of a downtrend going on. Sorry about all the grid lines there. A bit of a downtrend going along on the hourlies for the Nasdaq. But I suppose if we were going to use the same argument as with the S&P, yes, the big trend is down. We had these lows again from June, and the market has made a reasonable half decent bounce off them. So for me, there's perhaps a better argument for more of a short-term bounce in the S&P and the Nasdaq perhaps struggling because of the tech bias, obviously. But I think some interesting stuff in stocks, but nothing to get too excited about any sort of runaway moves over the medium term in stock markets now. The trends are still down, but I wonder if perhaps we'll see a bit more of a bounce back next week. If we take a look at the German index, look at that. This is interesting. It's the DAX. So the DAX, again, this is basically the same trend line across the board for all these markets. So from the highs this year, the trend has been down, and the DAX is absolutely right now on its downtrend line. So whilst I'll pay attention to downtrends, for me, what is more important, and more of this in my trading course, obviously, previous highs. So I think it's going to be interesting if the DAX squeezes back up to 13,500. So for me, again, okay, big trend still down, but we've had a run of strength for much of this month in the DAX. I would be leaning towards perhaps there's a bit more DAX strength to come going into next week, and the really big level to watch is going to be, for me, initially, those highs from mid-September, 13,560. Let's call it that. So I think there could be a bit more to come from the DAX. Let's see what happens next week. But it's an interesting one, considering that is already threatening its downtrend line. If we have a look at the Japan stock market, pretty boring. As I remember from last time, it's this is the Nikkei, the 225. It's pretty sideways. We'll have a look at the FTSE. I suppose not dissimilar to the FTSE. So different makeup, obviously, to the likes of the S&P and the Nasdaq. We haven't seen the lows since May taken out. That was a good buying opportunity with our Harry Hindsight hat on. The sell-off in October down to 25,500. So again, if we see further strength in these markets, US markets, perhaps we'll see a bit of a lift for the Nikkei, but nothing too interesting for that one. So, and the FTSE, there we go. Again, we've come back very briefly this year. It's interesting, that false break there in the FTSE. Thursday, the 13th of October. I'm guessing it's hard to keep track, isn't it? But that was maybe when one of our many prime ministers resigned or did something wrong. Who knows? But so anyway, spiked down very briefly to new lows for the year. But again, it's pulled back. It was at the bottom of the range. Been, again, very range bound over the last 12 months of FTSE, bottom of the range. Perhaps we'll see it pull back into the mid 7,000s again. So for me, the interesting stock market to watch, that DAX definitely, because I wonder what will happen when we get to 13.5, and the S&P, because I do wonder if we'll see a bit more of a rally, perhaps Monday, Tuesday, and let's see what happens with this interest rate shenanigans on Wednesday of next week. Okay, that's that. What should we do next? Let's talk about gilts. I did a really good trade this week on gilts. I talked about it last week, and I bought it last week. Clearly, it's a really active market at the moment, UK gilts, because of what's gone on in the UK. This is the UK bond, and has gone from a year ago around about 127 and traded as low as 92.5. But as things have settled down over the last week or two, really, since Rishi came in and everything else, I bought gilts last Friday with Boris saying on Sunday night he wasn't going to run again. We saw a bit of a gap up right at the start of this week. There we go, in there. Strong move on Monday when gilts opened, and I bought in Friday somewhere. And I came out up here somewhere, and I bought back in on the breakout. But anyway, I think it's interesting what's gone on with gilts, because they've been so absolutely pummeled since the summer because of the political situation. We've seen, arguably, I'm not a fan of patterns, but arguably a bit of a double bottom thing going on with gilts. So for me, I'm long at the moment, again, from the breakouts. I'd definitely be leaning towards being a buyer of dips on gilts. I do wonder, we know there are tough times still to come in the UK, as for many economies, but I wonder if perhaps a lot of the panic has gone out of that market for now, and we'll see perhaps something of a continued recovery in gilts. Let's see what happens. But it's always an interesting one to watch when there's a whole load of stuff going on politically. Let's talk about oil. I got stopped out of it last night, but I did do a little buy trade on oil beginning of the week that was underwater for a bit. But again, it's not much has changed over the last week in oil. But I do wonder, so my view is pretty much the same as last week. Are we perhaps, if I could draw my lines in the right places, are we perhaps seeing the end of this correction in the price of oil? From the 14th of June down to the end of September, are we seeing oil trying to stage a reversal in the trend? I think we might be. I don't think the oil price is going to be troubling $120 a barrel anytime soon, but I do wonder, for me anyway, at the moment, is the right approach to be a buyer of dips rather than a seller of strength. We'll see. For me, there's obvious on the daily charts. There are obvious big levels to look at. For me, the whole 76 to 81 area, clearly big support. I can't remember when I did the trade. I think I did the trade on Monday of this week, which would have been in here. There we go. So I think I probably bought it here somewhere, and then it just fell off a cliff. So I had to sit with the trade for about 3 days until it got a bit of a run on, and then I got stopped out on a little wobble here for a profit. But I do wonder, it's the moves we're seeing in oil, I would say, does look like it could have built a base over the last few weeks or so. Let's see. So for me, I'd rather be a buyer of weakness. If we got slammed back to the low 80s again, for me it looks like a buying opportunity. Probably not do too much up here. Let's see what happens. But I do wonder if we are starting to see things turn around when it comes to the price of oil. Now, gold again has not changed for me from a week ago. I think it's an interesting market to watch, but we're trading now where we were pretty much this time last week, right? So we've got the big downtrend in gold for this year from the March highs, lower highs, lower lows, blah, blah, blah. The market did try and rally through that downtrend line early October, but sold off. Interestingly, the latest sell-off from that October high didn't take out the late September low. Okay, and I think that's interesting. So is gold perhaps going to try and build a base here? I think it's far too early. But for me, if I absolutely had to buy gold here, and I'd be in no rush to do that, if I had to buy it, I would put a stop underneath the low for the year, $1,615, something like that. I think if we see that level go, it just confirms this downtrend is still very much in place, and the risk is for a much deeper sell-off. So for me at the moment, it's an interesting market to watch, but I haven't got any compulsion to do anything about it. So let's see what happens. Let's see, can it build a base here? Is that what is going on at the moment? Or actually, is it just going to break down again? So I've got no firm opinion really on the price of gold. Let's take a look at the price of silver. Again, I think it's maybe a bit different silver. I often say what a frustrating market I find silver to be. I did say, I think the other week I was short. and I ended up getting stopped out for break even in the end on silver. I do wonder if there's perhaps more of a bullish argument for silver than there is for gold, but silver is a pig of a market, I find, because it looks like this downtrend's broken. It looks like we're really trying to build a base on silver over the last couple of months or so. We've got just about higher lows. You look on the hourlies, it's maybe a bit clearer. And it is sort of trying to get its move on with the trend. At the moment, I never thought I'd say this, I'd much rather be a buyer of silver than a buyer of gold. If I was a buyer of silver now, the absolute closest I would have my stop would be the other side of 1870. So I think that's maybe a mildly interesting market to watch next week. But both of these precious metals, they have been under pressure for a lot of this year. And the question is, are we going to see a base build down here? Or are they just going to fall off a cliff again? Let's see. Let's see what happens. Natural gas. We didn't do natural gas. I was short natural gas I think I've talked about it. I came out of it last week. It's been a volatile week again. Natural gas is, if we flip it over to an hourly, we'll see it. It is a nutcase market. It traded as low on Monday of this week, traded as low as below $5 and touched 585 on Wednesday. And here we are at 537. So it's a 15% move in a couple of days. I remember someone asking on a live stream last week, was now the right time to buy natural gas? And I think, my answer would be the same. For me, I'd argue that trend is still down, but we're getting close to the longer term uptrend on natural gas, which had been going since July 2020. Arguably $5, psychological support, all of that stuff. So I think it is interesting down here, but for me, it's not as clear as it has been over the last couple of weeks. I've just seen someone saying I'm making a profit on natural gas for once. Do you know what? I remember what year is it now? I think it was 2020 when I was doing the stuff with the broker. Whenever I did a trade on natural gas in the videos we used to do, it always just go completely the opposite direction. If I buy it, it would go down. If I sold it, it would go up. And then 2021, I think nearly every trade I did on natural gas was a winner. So you never know. And you're right, it gets really frustrating, I think, when a market is like that. And silver was very much that sort of market for me last year. So for me, I think it's interesting down here. This is another one. I'm quite happy to sit it out, natural gas, and see what happens. But I wonder, will we see $5 end up being a base? Let's see. I'll tell you what's also interesting. I don't know if I mentioned it last week. Given the fact that natural gas has halved in 2 months, it's not getting a lot of media coverage, is it? And this is good, presumably, when it eventually filters through to domestic heating and all of that. The market price of gas has been dropping, and European natural gas as well. And it's quite a good story, but I think it does feed into the fact that does tend to be the more negative stories that we tend to hear about financial markets from normal media. And I'm not one of these people who thinks, mainstream media is all a big conspiracy, but it's only the negative stuff you don't hear. Oh, isn't this great that the natural gas price has halved in a couple of months? We're going to see cheaper prices. Clearly not in the winter, I would have thought, but we'll see. We'll see what happens around $5 anyway for natural gas. Right, let's take a look at these currencies. Let's start with the dollar index, the old favourite. Now. I love this market. If you've ever watched any of the live streams I do, this is a market. I've actively traded this market for about 3 years now. And I first got into this trend back in January 2021, way too early, because that trend didn't start till May or June 2021. And then all the way along, it's been a great trend, okay? But then it does start to feel now and again, is it becoming too much of a one-way bet? And it's exactly when something becomes a one-way, when everyone thinks the dollar, in this example, is a one-way bet, is exactly the time the market is going to turn around and slap everyone in the face. So we've seen quite a sharp-ish sell-off since the end of September. What was the high end of September? Nearly 115, and it traded to 109.5 yesterday. Now, I'd be a buyer, which I always say about the dollar index, but for me, that trend is still up since Feb of this year, that bit of the trend since Feb is still up. There's good support for me. I would probably have my stop down there, the other side of 107.5. So for me, it's only if it starts to break down through here, does it look as if this trend is over. But it's quite interesting. Let's see what happens when these, not payrolls, actually the payrolls as well, but the interest rates come out on Wednesday in the States. Let's see, is that the thing that starts to expose some cracks in this strength of the US dollar? I don't know, but the trend is still up. I'm still long the dollar in my medium-term trading. I've been long pretty much for about 20 months now in various sizes and stuff, but I've always got at least one trade on the US dollar index. So we'll see what happens. But for me, that trend is still up, which brings us to Euro US dollar. So this is why this is interesting for me. Euro dollar. Now you could either argue here it's the perfect time to go short, or the market is starting to reverse. So this is the downtrend for Euro US dollar, which of course ties in with that dollar index uptrend since Feb of this year. The market broke out through that downtrend over the last few days, but has reversed pretty sharpish. So an aggressive trade here would be to be short. Go short. If I was going short now at 99.70, I'd put a stop above 102. I'd put a stop above those mid-September highs. So I think this is an interesting market to watch next week, euro dollar. But of course, if you wanted to be a euro bull, you could make the argument that it's trying to stage a recovery. Okay, so I think we have one of these situations where the big trend is being threatened. Is it the start of a new trend? Who knows? We don't know yet, but I don't know anyway. Maybe you do. Maybe your crystal ball is better than mine. But I think it's interesting. It's an interesting one, really interesting one to watch next week. So in the short term, perhaps still a buyer of dips, but is this whole 101 to 102 area going to prove to be too much for euro against the dollar? Let's see what happens. But this dollar strength has been going on for an awful long time. That trend is still up, but we know trends don't last forever. And I know I'm sitting on the fence here saying all of that, but that gets reflected in my own trading as well. I've got a position on at the moment. I'm happy to stick with it, but I am going to wait and see what happens on Wednesday when these interest rates comes out. Let's see what happens. Pound against the dollar. Actually, if you wanted to go short something against the dollar, pound against the dollar looks like the better short than euro against the dollar, to me anyway. We've got the trend for this year, since Feb this year. Look at this, almost textbook retest of the trend line and a move away. So again, if I was going short, and I don't have any pound trades open at the moment, if I was going short now, the closest I'd have my stop probably above those September highs. So 117.40 is the mid-September high. So really interesting to watch next week. Is this the likes of the pound and the euro finally turning the tide against the dollar, or is it just another dead cat bounce like all the ones we've seen this year in the currencies? Let's see what happens. And clearly with all these interest rates, big week for currencies next week. Let's do dollar yen. I remember when we looked at it last week, and then there was that intervention, wasn't there, on Friday? So I think this year we were looking at it, something like that, and then the intervention from the Bank of Japan came. Now, caused loads of volatility. The market went from 152 to 146 on the day, but for me, in dollar yen, it doesn't change anything. It doesn't change whatever trend we're going to pick on. I'll pick on that trend, again from Feb of this year. It doesn't really change anything. So again, for me, if I was trading dollar yen, it's not one I trade very often actually. I've clearly missed a big trick this year by not trading it. But I'd be a buyer. The closest I'd have my stop probably the other side of these early lows around 143.5, and looking to see if it can swing up and swing through that old high again. But I think it's an interesting week for currencies, and I don't often think that. Sometimes they're quite boring. They're just noise day to day. But let's see what happens next week. So I'm going to jump into the questions now and rattle through those. But for me, things to watch next week: stock markets, because big trends still down, although they have been trying to stage a recovery. So for me, the S&P is always the interesting one. The dollar index, because we've got an interest rate decision in the US next week. And oil, because I wonder, is it still trying to turn the corner? We have days where it's still pretty boring, then we get a bit of a one-day wonder day. So I think there's a lot to watch next week. There's not that many new trades jumping out at me like there were maybe a week ago. I've still got my gilt trade back on, so I'm hoping we'll see a bit more calm in the gilt market. So I bought it last Friday. I got stopped out somewhere here for a profit. Then I bought the break again a couple of days ago. So I'm in since Wednesday. So we'll see. We'll see what happens. So lots of news coming out to affect these markets. So let's just do a quick reminder of the contacts. To find out more about me and the training course, go to jonesthemarkets.com. It is, when this short-term trading stuff gets uploaded over the next couple of weeks, I absolutely genuinely think it is the absolute best trading course out there, because I actually do it and I'm not one of these con men who just talks about it, but it is going to be really good. So to find out more about that, go to jonesthemarkets.com. Any questions, drop me an email, and my email is dj@davidjonestrading.com. Right, let's have a look at some of your questions. Let's have a look at some of the stuff. With WTI, we looked at that. BTG, what's BTG? Is it a pharma company? Oh, I don't know. It's not coming up here. B2 Gold Corp. If you can just tell me again what BTG is? I don't think it's that. Is it that? B2 Gold Corp. If you want to just, if there are stocks you want, and they're maybe a little bit not obscure, but not the big stuff. If you could, I'm just looking somewhere else, see if I can find it. If you can put in what they are. Yeah, it is B2 Gold. I think that is coming up. Okay, so maybe this is the one you want looking at. B2G, B2 Gold Corp. No idea what they do. I'm guessing it's something to do with the gold price. To me, it looks a little bit dull. Yeah, so again, I think if it is something to do with gold, maybe it's nothing to do with gold at all. I know it does say precious metals. It's a little bit dull, and again, is it trying to build a base down at $283? But it's not done very much, has it, over the last few months? Arguably, it's still edging a little bit lower. So it's an interesting one, but I guess it needs to wait for the fortunes of the gold market to turn around, and then perhaps that turns around as well. But it looks a little bit dull to me. Yeah, details on the charts I'm using are in the description of this video. Down below. Will Twitter be completely removed from the markets or just for trial? Well, I'm guessing, I haven't followed the details, but if old what's his face, Mr. Musk, has taken it over, he's buying all the stock, isn't he? So he's buying all the stock. There we go. So the last price I've got is yesterday at 53.70, and old Muskie is buying all the stock at 54.20, isn't it? That was his price. So they will cease to exist as a public company, Twitter, because it's done now, isn't it? So yeah, you can't buy shares in Twitter. It'd be interesting to see what he does with it, whether he plans to, I don't know, who knows, refloat it in the future, change it into something else entirely. Let's see. But yeah, so yesterday was the last day of public trading for Twitter in this stage of their life, and it has been, it's been, I'm not going to say a disaster since they came to the market, but I do remember when they came to the market, because we had, I think we had someone working in a different place, working in a dealing room. We had Sky News or someone covering the IPO of Twitter. So it was back in November 2013. Came to the market about $50, loads of volatility, but yeah, got taken off in the end, slightly higher than where they started on that first day of trading. Let's see, what else have we got? Platinum. Let's have a look at platinum. I haven't looked at that for a while. Platinum. I was wondering the other week if that was starting to turn the corner, and I'd still sort of be leaning that way. I mean, it's tricky, isn't it? You could argue, if we were going to be a little bit anal about it, you could argue the big trend is still down on platinum. If you picked up on this spiky high from Feb 2021 and to that high it got to in March of this year. So you could absolutely argue, if you wanted to, the big trend is down. I just wonder if some of the stuff we've seen since the summer, is it trying to build a recovery? Okay, so we've had a little run of an uptrend, haven't we, in platinum? But it's interesting that even today, it's running a little bit scared of those old August highs ahead of 980 or $1,000. So for me, I would probably rather sit on my hands and see what happens. And if it got knocked back to the mid 800s again, I'd be tempted to be a buyer of a bounce on platinum. Let's see what happens. But again, for me, there's not a compelling reason to do much at the moment on platinum for me. It's an interesting one to watch, but I'd rather wait and see, is it actually going to, if it sells off from here, is it going to hold above these old lows? And if it does, maybe there's a short-term trade. But for me, it's a much harder market to trade when it's doing that than when we had some sort of half-decent trends in 2020 and into 2021 for platinum. Do you trail your stops on existing positions to the same level you would place a stop on a new position? No, I don't. I've got a formula that I use for trading my stops, which I cover in my training course. So the market has to have moved a certain amount before I trail my stop in an existing position. So if I had a position on Netflix, for example, then the market's got to move a certain amount, then I move my stop. If I did a new trade on Netflix, my existing trade wouldn't have any bearing on the stop for my new trade, and vice versa. So the position, once the position's in profit, I look at it in a certain way. If I'm looking to add to that position, I look at the market as if I haven't got a position on, if that makes sense. I'm sorry if it doesn't make sense. But no, the Netflix move is interesting, isn't it? We had that gap up on those earnings, didn't we? And it's held. It continues to hold. So I'd be absolutely a buyer of dips on Netflix. Don't know if I want to be a buyer here necessarily, but the risk is I'd miss out if it suddenly ran away from here. And what was the other one? What was the other one you said? Netflix and Rivian, the old electric van company, isn't it? It is electric vans, isn't it, Rivian? It's a bit of a dog though, isn't it? Is Rivian, or am I getting them confused? The ones where they pushed it. There was a demonstration. No, maybe I'm getting confused. I don't want to get myself into trouble. No, it was another one, wasn't it? There was another electric car company that during the demo, they rolled it down a hill or something, didn't they? Because it could naturally go, that is not Rivian. So Rivian is the electric pickups. And I've seen quite a bit of press for them over recent months, but it doesn't appear to be feeding through to the share price, does it? The share price looks distinctly flat, to use another electric analogy. You could argue that the worst is behind it, but it just looks a bit boring, doesn't it, to me? So I've not got a lot to say on this. Let's have a look at the old Tesla. I wonder if the old Tesla investors are freaking out now old Mr. Musk is going to be running Twitter. I mean, for me, I think we looked at it last time round, this 180 to 200, big support for Tesla, a little bit boring again. Since the heady days of it just going crazy all the time, which ended about a year ago. A little bit boring. Now, Tesla. How do you deal with losing streaks? I've not had a losing streak for a couple of months maybe, but I mean, they do happen, obviously. It's a really good question as well. In the same way, like up until last week, I think I'd had about 5 or 6 winning trades on the trot. 5 or 6 winning trades on the trot. And if you can have 5 or 6 winners on the trot, it's just as easy to have 5 or 6 losers on the trot, clearly. And I just think you need, I think first of all, clearly your money management and your risk control and your stop losses, which all get taught in my course, all need to be right. Because if like too many people, someone is risking too much and has a losing streak of 5 or 6, and they've got £1,000 account and they're risking £200 every time, they've got no account left, have they? So your money management's got to be right. And also I think you've just got to have faith in your strategy, faith in your approach to markets, and just accept that the same way. I saw someone mention tossing a coin in the chat. If you tossed a coin, all right, it's random, but you'll get runs of heads and runs of tails. And it's the same with trading. I think you have to accept you'll get good runs and bad runs, but it's having faith in the strategy that it will all be okay in the end. But that is easier said than done, and that's a part of trading psychology, also covered on a certain training course. But the trading psychology bit that makes it difficult, because it is sod's law, isn't it? If you have 5 losers on the trot and you think, I'm not going to take the next signal, and the next signal is the one that would have made back, maybe half of the money you've lost on the losing trades. So I'm not saying it's easy, but I think it's once you have that confidence in your approach and your ability, it becomes easier. But it's never a nice thing to have a bunch of losing trades, because you sit there thinking, do I actually know what I'm doing? Someone was short gold. Bitcoin. We've not looked at Bitcoin. I think Bitcoin's boring still, isn't it? Let's do Bitcoin futures, because that's what we've got in here. Boring. I mean, but it's exactly when it's boring when I think I said it last time round, where we should maybe pay it a bit more attention, because it's when it starts running away, all the nutcases get involved and all end up buying at the top. So maybe when it's boring is when we should pay a bit of attention. I think, like I said last time, if you really wanted to buy it, if you thought it'd bottom down here, we've got a good reference point for a stop loss. For me, the other side of 18,000, the other side of 17,000, let's say. So let's say it was a buy now at 20.5, thinking that, look, at some point this is going to explode again upwards. For me, I'd put a stop at 17.5 or 17. I go 17 actually, sort of 17,000. But it looks pretty boring still. Nothing has changed. What about the other one? Ethereum futures. It's a bit more volatile, Ethereum, isn't it? That big trend in Ethereum is still down. Arguably as short. I would expect it to come under a bit of pressure from here. For those of you who are fans of the old squiggles, the RSI is overbought as well. So I think Ethereum is more likely to drop $300 than rally $300 from here. Let's see what happens. But nothing too exciting in the world of the cryptos. Gold in Aussie dollars. Oh, I don't think you've seen that one before. Let's have a look. Gold in Aussie dollars. Here we go. Let's have a look at that. On a daily chart, I don't know. It just looks a bit boring to me, to be honest. I respect you for offering it up as an alternative, but there's not a lot going on, is there? It's stuck in a range, isn't it? That's the range. And it's almost slap bang in the middle of the range this year. So for me, there's not a lot exciting with gold and Aussie dollars, I'm sorry to say. So yeah, it's not one for me. Copper. We've not looked at that either, have we? Copper, often referred to, of course, as Dr. Copper, as it is a barometer of how well or not economies are doing or are looking going forwards. It still looks a little bit depressed to me. The doctor still looks not exactly in the best of health. Bit boring, I think. I remember on the old live streams doing a trade in copper down here. So after speculating that sell-off was a bit too sharp, and it's just a bit sideways, isn't it? So for me, I would probably want to be a buyer rather than a seller, but I'd want to sit it out a bit and see if these old levels hold. And you could absolutely argue that it's always darkest before the dawn. Everything is so gloomy at the moment. It's not surprising that some of these things like copper and oil aren't running away. So so for me, the test will be if we sell off a bit deeper from here, does it hold? But I'd probably, even though it's been a bit all over the place, I'd probably rather be a buyer than a seller. But I'm quite happy to be patient on that one. Euro, Swiss franc. Euro chuff. It's interesting, this one, isn't it? We've looked at this now and again before. Let's have a look. Let's start from the basics and say, if we were going to be, again, purists and pick up on the big trend from up there. Okay, it's well away from that big trend though. I would absolutely make the argument that we are seeing at least a short-term reversal in Euro Swiss. Okay, so it looked really weak here. I would have absolutely been wrong-footed by this. But I do wonder, the break above 98.70 recently, for me, it's quite an interesting trade going into next week, actually, Euro Swiss. To be a buyer, wherever it is now, 99.17, and put a stop loss, I don't know, 97.50 maybe, and see if it can stretch its way a little bit higher. So that's an interesting one, that Euro Swiss, for maybe a bit more of a bounce from where it is now. That's maybe, I think, one of the more interesting markets out of everything we've looked at today. to watch going into next week. So there's another one for our little diary reminder next week, Euro Swiss. Any views on Oren Energy? Oren Energy. Never heard of them. Is it, okay, is that the OMX? Oh, wow. Pretty volatile, isn't it? I always have, I mean, I say this all the time. I always have a problem trading these ones that absolutely take off. You know, this thing tripled since July, 18th of July. I don't know what currency it's in. SEX, Swedish. Is it krona or krona? I never know. The Swedish currency. So the thing went from 8 to 26. What would you do? I mean, I'd have to be a buyer because the trend is up. The only problem, and it's a big problem for me, where'd your stop go? The closest I want my stop would be the other side of the mid-October lows, down at 1960, but maybe even wider. So I think it's one of those ones, if you're in it, it's great. And it was trending higher. Actually, it did sell off quite viciously, though. Tricky one for me to trade that. I'd be a buyer, but then I'd also be a bit nervous because it doesn't really like 24 to 27, does it? So tricky one. I'd rather buy a dip, to be honest, but I'd probably end up doing nothing. But if you're in it, well done and good luck to you. Dogecoin. I can't believe you are tainting this live stream by mentioning Dogecoin. But let's have a look at Dogecoin. Oh, look. So if you zoom in, it's been an absolute brilliant week for all the Doge holders. Well done, Doge guys. Not so good if we zoom out so much. I mean, why is that? I mean, I don't care why it's gone up this week. But if I was in it, I'd be thinking about, I'd have a tight stop, put it that way. Okay, let's see what happens, because we saw a blip up to 0.0892 in August, and we're not far away from it now. So there's clearly, I don't know, there's been a bit of news. Or is it Elon? Is Elon paying for Twitter using Dogecoin? Who knows? So it's interesting, but for me, I'd be worried. You know, we do, you know, if we were going to treat it like a normal market, and I know, you know, maybe stretches it with some of these cryptos. You know, since May of this year, it's had a real problem whenever it's got near to point one. You know, so I'd just be, great run this week, fantastic if you're in it, but I'd just be a little bit nervous up here, and I absolutely would never buy it anyway. Oh yeah, if you could click like on the YouTube thing, whatever it's called, the thumbs up, that'd be great. I'm sure I've got no idea how YouTube algorithms work, but maybe it does something. Chinese indices and ADRs down at 25% of all-time highs. Any thoughts? I saw that last week, that the China, I can't remember what it was. I saw somebody talking about it on Twitter, but let's have a look at the China A50. Because I did do a trade on this, I remember, in the old live stream, wondering, was that a low? And clearly it hasn't been. For me, so this is the China A50, I would sit it out still. For me, I'd absolutely, because the thing, up until that's today, is still hurtling lower, right? So it's back to where it was in 2019. So we're at a 3.5 year low for the A50, the China. We'll have a look at the Hang Seng in a minute. So for me, interesting, but I would not be trying to buy the bottom just yet. So have a look at the old Hang Seng index. Oh God, yeah, same with the Hang Seng, isn't it? I mean, that's been pretty brutal, isn't it? I mean, that's halved in the last 18 months and more. So so where's the Hang Seng? Maybe it was the Hang Seng I saw. Back to 2009 levels. 13-year low in the Hang Seng. I remember these times, because that's how old I am. I remember that run there, when again, it just seemed like free money, the Hang Seng, into the financial crisis. And it's never really managed to, well, it's broke those highs briefly in 2018. So really interesting, these markets are getting absolutely pummeled. But for me, from an investor point of view, I'd be still happy to sit my hands. Good luck, whatever you decide to do. Google and Amazon. Google, Alphabet Inc. Still looks, it's pretty weak, isn't it? Still. I was sort of hoping we were going to get a bit of a turnaround in the fortunes of stock markets, but it's not really happening yet, is it? Looking at some of these stocks, the big stocks. I mean, Google only yesterday hit a new low for that down move, you know, so that's pretty weak, isn't it? Back to where it was January 2021. So 18-month plus low on Google. So again, I'd be, from a buying point of view, I wouldn't be doing anything. If I had to do anything, I'd probably be a seller. The closest I want my stop would be above 104. It's not a bad stop, that. You could have like a $12 stop on Google, and if everything is going to continue to fall off a cliff, it could be an interesting trade. I'd probably rather sell a rally. Interesting to see where it finishes today, but that trend is still down. And Amazon, haven't looked at Amazon for a while. Have they been hit this week? Oh, they have. Okay. Did they have earnings? I mean, do you know what? That's quite an interesting one, Amazon, because I think Amazon have been hit much harder than this before. I think there's a trade here. I think there's a bit of a Friday afternoon trade here. I'm going to set up a trading account to do trades on these live streams. But there's an aggressive trade here if you really fancied it. The risk reward is good, even if the reasoning behind it isn't very good. So Amazon has gapped down after last night's earnings, right? So it's gapped back to a 2.5 year low, near enough, all right? The aggressive trade would be to be a buyer of Amazon. Let's see how they're trading. So there we go. So they've traded as low as 98. I would wait for the first hour to be out of the way, so wait another 10 minutes. Be a buyer of Amazon and put a stop loss. What's the low for the day? Low for the day is 97.60. Put a stop loss maybe at 96.5 and see if it can fill at least some of that gap. If it reverses and makes new lows for the day, I think it could be a case of look out below again for Amazon. But it's an interesting one that it has. It had been trying to build this base since May and June and July, and it got clobbered on the earnings. But let's see, is it an overreaction from the markets? Let's see. Do you think the halving in gas prices and the downtrend in oil could help to signal the end of high inflation? Yes, I do. I really do think that if we haven't seen the peak of inflation, I do think it has to be near. Because again, it does feed back to this whole media thing. Whenever, and I use the phrase mainstream media to describe them, not as a conspiracy theory, whenever the mainstream media starts covering market stuff, it normally means that market's moved to an extreme. And the inflation story was building for at least a year. Clearly Ukraine, the Russian invasion of Ukraine, fanned the flames of inflation, but already loads of prices were going up. And because everyone's still a bit headless chicken about inflation, it does make me think, are we near the peak? I think we are, but let's see. But you mentioned to have a look at some food and stuff like coffee. I've traded coffee a bit in the past. Hang on a second. Let's have a look at coffee futures, coffee cash contract, that'll do. There you go, coffee's been there. Look at that. I've done some really good trade. I was long coffee, got stopped out coffee a couple of weeks ago, I think. But I've done some really good long trades in coffee over the last couple of years. And look at coffee since, when's that? End of August, 240, 170. It's nearly 30% drop. That is a 30% drop, isn't it? In the price of coffee in under 2 months. So coffee now is trading where it was in July 2021. Interesting. Corn, let's have a look at that one. Oh, not so much in that, not as dramatic. Soybeans, let's have a look at soybeans. Oh, they're a bit flat, but again, they're well off their previous highs. So a lot of these commodities are well off their highs. So which again is another thing that makes me think, if we're not past the peak, are we near the peak? And hopefully everything gets a bit easier for all of us next year. So yeah, let's see. How much does the time of day affect the probability of a trade going well? I'm not laughing at the question. I'm laughing because I've got absolutely no idea. Especially forex, e.g. trade at 3:30, 4-hour candle looks green, then it massively flips to red in the last 20 minutes. Well, I would say, all right, for me, one of my rules, the shortest term I go on a short-term trade is an hourly candle. And I've got to wait for the hourly candle to finish. So if I was trading off 4-hour candles, I'd wait for that 4-hour candle to finish, if that makes sense, rather than trying to second guess it. So that shouldn't be an issue anyway. I would guess that most of my trades are placed in the morning because that's when I have a proper look at markets. So I don't actually pay any attention to time of day. The only exception I would make there is on something like the S&P 500, which is clearly a 24-hour market. but the real market opens at 2:30 p.m. at the moment, UK time. So I would normally wait for the real market to open. I wouldn't do an S&P trade in the morning. I'd wait till the market opened in the afternoon to do the trade. But pretty much I don't really look at time of day. And again, because I'm not really trading for a time frame of hours and minutes, I think it doesn't make much difference to my trading, and it all pretty much smooths out. That's how I would say on that. Intel, let's have a look at Intel. Intel Corp. Oh, okay. I mean, that has been absolutely hammered, isn't it? We've looked at that in the past. So where was that then? April was $67. $25. I mean, it's always tempting, isn't it? It's particularly given the carnage that's going on this week with other tech stocks. At least Intel is bucking that trend, isn't it? So it's always tempting to think, quick, I've got to buy Intel because this is the bottom. It's interesting. It's more interesting now than it was a couple of weeks ago. But I'd be a little bit patient and see, right, can it hold down here? Are we finally seeing the worst behind Intel? I would say it's too early to say, because you could draw downtrends all over the place on Intel. And the latest downtrend looks like that. So for me, interesting one to watch. Given again the pummeling it's had, perhaps we will see a base being built for Intel. I mean, it was a pretty big level down here, isn't it? I mean, that is the low from 2015. It's a 7-year low on Intel. So interesting. Let's keep coming back to it and see what it looks like. Halliburton, the big conglomerate thing that makes everything. That looks all right, doesn't it? Again, it's a bit sort of halfway up the range, isn't it? I'd rather be a buyer than a seller. I'd rather get a bigger dip and be a buyer. But for me, we look at that sort of view. It's all a bit range bound this year, which is good because it's outperformed the rest of the market. I'd be looking at this trend if I was trading it and looking to buy the dip. But nothing that jumps out. Should I buy S&P or wait for Wednesday? Only you can decide, my friend. Poor results on Amazon. What do you think of USO on RJF? USO, is that US oil or something like that? United States Oil Fund. What is it? Is it an ETF? I'm guessing it just tracks the oil price, doesn't it? So for me, my view on USO would be the same as my view on oil. Have we seen the worst? Is it going to stage a bit of a rally? Because all USO is, from my very brief look at it, is an ETF based on the oil price. So it's going to track what the oil price does. Raymond James Financial. Crazy. It's been a crazy week, isn't it? Why is that moving so much then? Is there... Who keeps phoning me? It's Friday afternoon. What's wrong with these people? No one does any work on Friday afternoons in the new economy, do they? Let's see if we can see any news on that. Why is that investment banking company... I don't know, beat earnings forecasts. Fair enough. For me, that's interesting because we are running back up to the old highs, aren't we? Running back up to the old highs. Interesting to see that's an interesting one for next week for me. Let's come back to it next week and see if we manage to get a bit of a breakout trade on that one. But an absolutely stunning week, this one, back up to the highs from Feb of this year. Right then, everybody, we are going to wrap things up there. That's the last of the questions. So I'm finishing. Oh, that's all right, not too bad. 2 minutes to 3:30. So like I say, the training course, find out more, go to the website, jonesthemarkets.com. dj@davidjonestrading.com for any questions for me. I'll do it all again next Friday, of course. Payrolls next Friday. Really interesting week next week. A whole load of stuff going on next week. So we could well see some volatility. If you could like the live stream and subscribe if you haven't subscribed, that's great. I will start putting up videos during the week. I did see someone mentioned it in the chat. I'm going to get this new short-term trading course out of the way first, but probably from about December, I'll start dropping in to the channel pre-recorded videos on, the pound and stuff like that during the week. But at the moment, I'm a bit focused everywhere else, but it will start to resemble a more active YouTube channel. But I'll continue doing these live streams. Thanks for coming along. Enjoy the weekend, and we'll do it all again next Friday.